Greetings and welcome. I'm Professor Denver, and thanks for checking out my demonstration on basic accounting in alignment with the chapters in my book, Accounting 101, Easy Accounting and Bookkeeping for Beginners. This session is about concepts presented in Chapter 7, the relationships between the income statement, statement of changes in retained earnings, balance sheet, and the changes in owner's equity. The financial statements of firms are 1. The income statement, 2. The balance sheet, 3. Changes in owner's equity, and 4. The statement of cash flows. Apart from the statement of cash flows, financial statements are usually created automatically and included in modern accounting software systems and accessible only to authorized employees by internal control security protocols. This demonstration is about the basic relationships among the financial statements and includes the links between the income statement and the retained earnings account, the retained earnings account and the balance sheet, and the changes in owner's equity. Recall that the income statement is a financial report that shows the revenues and expenses of a firm over a specified time period, along with the net income or loss of the business, usually a month or year. The balance sheet shows the total assets or economic resources owned by the firm at a specific date, along with its debts or liabilities, which are claims against the firm's assets, and the owner's equity or net assets if all the liabilities are satisfied. The statement of owner's equity shows the summary of financial activities that added to or reduced the amount of the net assets owned by investors for the financial period and includes net income or loss and additions or withdrawal of capital by the owners of the business. The statement of retained earnings, as its name implies, shows a summary of how the cumulative balance in the report or retained earnings ledger changed due to net income or loss over the reporting period. The income statement shows the revenues and expenses of a firm for the accounting period, in this case a month, and reports the net income or loss of the business. The net income is transferred to the retained earnings account in the general ledger as part of the firm's closing entries using a general journal. The retained earnings account balance is shown in the equity section of the firm's balance sheet. Notice that the income statement is linked to the statement of retained earnings by the net income or loss for the period. Sometimes the statement of retained earnings is shown directly below the net income amount in the income statement, showing the flow of the net income or net loss to the retained earnings statement. The income statement shows the revenues and expenses of a firm for the accounting period and reports the net income or loss, which is transferred by the periodic closing journal to the retained earnings general ledger account. The retained earnings account balance is shown in the equity section of the firm's balance sheet. The cumulative total for the statement of retained earnings is linked to the owner's equity section of the firm's balance sheet statement at the date of the balance sheet, the last date of the accounting period. The statement of changes in owner's equity or stockholders' equity. The statement of changes in owner's equity is a report summarizing the change in owner's interest in the net assets of the firm. In other words, how the balance of the equity account of the organization changed, increased or decreased from the beginning to the end of the current reporting period. In the example shown, the initial investment in the business by owners on January 1st was increased by the net income for January, and there was no withdrawal of capital by owners during the month. That is all for now. Thanks for watching this demonstration, and have a great day.